You got a chance to hear me read out all the latest data points for the month of April. Just your initial response, the reaction given that this was a month where China was hit with sky-high tariffs.
Yes, I think that tariffs impact has just started to weigh on China economy amid the strong fiscal support. We have witnessed a very robust fiscal stimulus in the first 2 months. If we go in details of the numbers, China's new social financing reached 1.60 trillion yuan in April, a year-over-year increase of 1.22 trillion yuan compared with 2024, forcefully illustrate a strong supportive fiscal stand sustains, because we have already witnessed a new social financing expansion of 2.38 trillion yuan in the first quarter. Despite the huge growth of social financing, the PMI in April declined sharply to near multi-year lows in 2025, even lower than in 2024. And also the government bond still accounts for 87% of the new social financing increase. On the other hand, we seldom see any improvement in the private sector credit expansion. Take example, for the corporate sector, the short-term loans has decreased by 480 billion yuan, 70 billion more decline than 2024. The medium to long-term loans has increased by 250 billion yuan. However, it's 160 billion yuan less than in 2024. So these indicators show that the tariffs has started to weigh on China economy. Also, I believe that this is an initial blow, because the large enterprises probably take the brunt initially. If we look at the large enterprise PMI plunge in April. However, the full impact of tariffs on small to medium enterprises will materialize in the following months after the de minimis exemption close on 2nd May, considering China exported lots of labor-intensive products to the U.S.
So we're seeing China's economic activity slowing in April. So this latest set of numbers that came through this morning would follow on from the PMI drop. We did see exports beating, but that was due to rerouting or maybe some front loading as well. CPI and PPI remained negative. This is all the April numbers. Since then, just last week, we had a de-escalation of the China-U.S. trade tariff war. What is your projection now, the trend going forward?
Yes, the 90 days tariffs truce and the removal of over 90% of the tariffs has provided some relief. But as we have just seen, as you have just told us the numbers for April, that the Chinese April economic data started to record earlier damage. But on the other hand, according to my calculation and other independent analysis, even the tariffs risk reduced from the embargo level, it still remained at an elevated of 43%, which I believe will impair the Chinese exporters' global competitiveness. This is particularly challenging for the 530 million US dollars annual exports to the US, because I think that there's no major markets can take over this volume or this share. And from the US side, the supposed inflationary effects doesn't seem to appear. We have seen the wholesale price dropped in 5 years, mostly in April. And the indices measuring the profit margin also recorded a historical low, which means that the enterprises in the US by so far refrained from passing on the costs of high tariffs. if the overall impact of the tariffs are deflationary and depresses the global demands, China exporter would face existential challenges. For the bright side is I believe that the fentanyl-related tariffs are easy to get lifted if China and the U.S. can reach some agreement between the China-U.S. Security Department. However, the 23% reciprocal tariffs are depending on the negotiations, which underscore the need for China to seek voluntarily the domestic structural reforms.
We've seen a number of brokerages revise upwards their GDP growth forecasts for China following the tempering down and the de-escalation of the tariff war. At CNBC, what is your expectation for China growth this year?
Yes, I think it depends on your former forecasts. For those brokers, they probably are downgraded China GDP growth rate to lower targets. But for us, we are actually still waiting for the finalized agreement between China and the U.S. Before that, everything's in the air. So we kept our forecast for China GDP growth for 2025 at 4.5%.
Is there anything in today's reading that would prompt you to suggest that China could be offering more stimulus? We heard, of course, from the PBOC recently the cut to the interest rates by 10 basis points. So we should expect an LPR cut tomorrow by the same amount, 10 basis points. What more could we see from the Chinese government this year?
Yes, but since now we have just seen some as I have said, that the fiscal policy are pretty robust in the first 2 months, in the first 4 months. However, as usual, Chinese fiscal policy are acted strongly as some structural policy. For example, the new consumer goods trading policy by subsidizing certain consumptions to help boost the producers of those products. So we see some trends. However, these cherry pick policies covering home appliance, home decoration, electrical vehicles, and auto cycle can by no means jumpstart the domestic economic circulation. The new equipment renewal and new consumer goods trading policy has initially boosted the industrial production capacity utilization in the first quarter of 2024. However, even this policy continued into first quarter of 2025. We saw a plunge of the industrial capacity utilization in the first quarter of 2025, which means there's no capex plan from the producer and stagnant employment expansion. That's no improvement in income expectations, which would, limiting the consumption growth to a very narrow scope rather than fulfill economy-wide revitalization. So if you ask me, I mean, there should be some more general fiscal policy stimulus, as you have just mentioned, like to lower the interest rates and in advance of more damages happen to the China economy.